All right. Hi, everyone. Welcome to this timing research special event on July 16th at 1 p.m. Eastern Time. Today we have Erik Gebhard here of AltaVest, and he's going to teach you how you can auto trade professional option strategies. And of course, this presentation is for educational purposes only. Trading is not suitable for all people. Please consult with a financial advisor and only trade with money you can afford to lose. And the session is being recorded and will be available on the TimingResearch.com website and YouTube channel as soon as I can get it processed. So I'm going to go ahead and turn it over to Erik.
All right, thank you, David. And looks like everyone can hear me and see me. So we're going to jump into this. As David said, we're going to look at automated options trading. We have some algorithms that we developed over the years to do this. We can initiate trades with one touch when you receive a trade alert. We're going to look at a live demo of how to do that. And I think part of the beauty of what we're doing here, it doesn't require you to sit in front of your monitor all day long. And you can also automate your risk and profit management along the way. So remember, we're speculating, and whenever you speculate, there's always risk. Whenever there's a profit, there's always a risk. So do take a moment, look at that risk disclosure. I won't read every word, but all funds committed should be risk capital, and past performance is never a guarantee of future results. A little bit about AltaVest. We've been a brokerage firm since 1997. So it's about 27 years now, I guess. And we've traded millions and millions of option contracts along the way. And that's yours truly there in the midst of some of our floor trading staff on the S&P 500 options pit from a few years ago. Not that many years ago, but everything is really mostly electronic now. That's part of what we're going to talk about. We created the Dragonfly option strategy and our proprietary order execution technology to go along with it. And we're registered with the CFTC. We're a member of the NFA, and we're located in California. And been doing this about 33 years since I was licensed in 1991, graduated from USC, University of Southern California, with my BS in Business Administration, and started in securities with my Series 6 and 63 licenses with the mutual funds and annuities. And I currently have my Series 3 commodity license, as well as my investment advisor Series 65 as well. So with that said, we're going to jump into the presentation, and we're going to kind of right off the bat talk about why we don't day trade. And the reason, quite simply for us, is there's less than a 1% success rate, and that's over a 5-year period of time. And that's according to quantifiedstrategies.com and some studies they've done. And we don't rely solely on reading charts. This, I'm sure we can kind of relate to this. This is something we don't do. According to my calculations, the stock market will fluctuate today. So we're not going to do any of that. We're going to talk about using algorithms to trade and why we really can't compete, because as humans, we have emotions and the algorithms don't. This is really our trading competition. They run automatically, built-in risk controls, high frequency trading, algorithm, systematic trading, whatever you want to call it. 90% of US equity trading volume is algo dominated, according to JP Morgan. But can algos be used for professional style options trading and spreads? Yes, they can be. And we're going to look at how to trade options like large institutions do, or like an insurance company might do it. They get paid premiums to assume risk. They sell and manage time. They insure themselves by hedging, and they're consistent and they're patient, and they have a process to make this happen. And they're simply looking at probabilities and math. What are the favorable long-term odds? They use actuarials and statistics and all that good stuff. And this kind of made me laugh here. May the odds be ever in your favor. So that's kind of what we're lining up to do here when we're trading options. And that's why we like to collect option premium. We don't only collect option premium, but we want to talk a bit about that today. Some of the option premium collection strategies where you manage risk and reward. Don't get too greedy. Use experienced help along the way. You want those automation tools working in your favor. We're going to look for base hits. We're not swinging for the fences and looking for grand slam outcomes here, if I want to use a baseball analogy. And these are short option strategies, or strategies where you collect the premium that others are paying. And they can be non-directional, bullish, or bearish, and every outcome is targeted with fixed risk and reward in advance. So before we jump in, let's learn 2 letters of the Greek alphabet, and one of them refers to probabilities, and that would be delta, and it means how much does the option value change with the change in the underlying index. And we'll look at an example here. It's the approximate probability of expiring in the money. That's how option traders view delta. So if delta is 0.25, that means at that moment, there's a 25% chance that that option would expire in the money, but conversely, a 75% chance that it would expire worthless. So that's these yellow highlighted here numbers, and this approach is kind of how we like to look at it. Look at the inverse of delta, and that's going to tell you here, well, not the inverse, but if it has a 25% chance of expiring in the money, that obviously 70% chance it will be worthless. So how can we use that in our trading to do that? Remember too, delta is not static, meaning it's not just one number that stays the same all the time. It's always moving with price and time, and it is not the probability of a winning trade. So keep that in mind as well. And then the other Greek letter here we're looking at is theta, and that's representing time decay. Options, remember, are a wasting asset. They have limited lifespan, and theta represents time decay. It's a negative number referencing 1 day of time decay. So if an option's at 10 points and theta is negative 0.05, the next day the premium would drop to 9.95, and the next day after that 9.90, and so on and so forth. Here's what it might look like on a graph. As you approach time 0, the percent of the premium remaining on the option declines and eventually expires. So that's called theta decay. And then Wall Street pros trade multi-leg option spreads to collect premium. So we're going to show you how to do that. And one example would be an iron condor spread. It's a non-directional strategy, and it's a put spread and a call spread placed simultaneously. And let's look at a graph. I think the picture is worth 1,000 words, because this might sound like a bunch of mumbo jumbo right now if you don't see the picture. So here's the call spread that you're selling, and here's the put spread that you would be selling. And you can see the red line is the call that you sell, and then the blue line here is the call that you buy as a hedge. But the net result is you still collect premium on that transaction. And the same thing with the structure on the puts. You sell the red line, you collect premium, and then you simultaneously buy the blue line, and that hedges the risk somewhat, but it does cost you money. But the net result is you collect premium on the put side and call side of that. And here's the market price kind of going back and forth and staying in the middle of that range. And that's the whole idea. You want the market to stay between your upper and your lower boundary, or the calls that you sell and the puts that you sell. So every short option, there's a long option. So these are called covered spreads. And it's a non-directional strategy on that short iron condor spread. And why are we even bothering to do this? How do you close that trade out? How would you know when to close it out? Well, because theta decay works, as we talked about just a second ago. So if you place this trade here, the market's sitting here, and you sell a call spread, sell a put spread, and you've created an iron condor, you want the market to kind of just chop around in a range. And then as theta decay works, then here this blue arrow says to buy back the spread. So maybe you've sold it for 2 points and now it's worth 50 cents and you buy it back. So you sold high and then you bought low. In this case, you see here this blue, something called the RTI. We'll show you that in a minute, the risk thermal indicator. But that's your signal to then close that position out and take your profits and move on to another trade. And we'll show you again in just a few seconds with a live demonstration of how that works and how you can automate this as well, so you don't need to screen watch. So you always intend to, when you sell premium, you sell it for a certain price and then you hope to buy it back for a lower price than what you sold it for. And that's the whole idea when you exit one of those trades. And here's our proprietary strategy. And it's another short option strategy, and it's really a variation on what we just saw, and it's called a dragonfly. And it has 6 legs. So it's another non-directional strategy for premium collection. And again, a variation on the iron condor. And here's what the dragonfly looks like. Don't worry, we'll walk you through this here, but it does look a bit cumbersome at the moment, but it's really not. So we'll look at the calls here first. You sell 4 calls, you buy 3 further out of the money calls and 1 closer to the money call. And you have the same structure with the puts. You sell 4 puts, you buy 3 further out of the money, and then 1 closer to the money. The net result is you collect premium on the puts here, and you also collect premium on the calls. And let's take a look here again at how this plays out. I'll point out before I go to the next image, the 1 put that you buy here, if you'll notice, is 25 points closer to the money compared to the 4 that you've sold. And the 1 call that you buy is also 50 points closer to the money compared to the 4 that you've sold. And you own this call here, and the delta is higher so that it will gain in value more rapidly compared to the other further out of the money calls that you sold. And that will become a benefit to you at times. And I'll show you in an example. So this is what happens to an example of what can happen to a dragonfly spread if things go favorably. And this is because of theta decay. Very similar example to what we saw with the condor. So the market sort of chopped around, even dipped a little bit lower, went back up, and then here's the signal to buy back that spread and cover it and take your profit and move on to the next trade. And here's that blue RTI signal again that can be automated. So the whole idea, you intend to buy it back for less than what you initially received. You look for the market to stay within that range. And of course, it doesn't always stay in that range, and it might move higher or lower, and then you'd have to cover that position and take a loss, and we'll show you about that as well. So be sure to stick around here in the next few minutes. We're going to show you also a really interesting feature to ThetaTrader, and that's our software we're going to talk about. We had a couple questions early on about what platform we use and about the trade alerts. Here's an example of what a trade alert might look like, and you simply just touch, accept, or reject your smart device or within your platform to accept that trade or reject it. So we're going to show you that in just a second, go through a live example. Of course, you don't always have to be non-directional. You can have bullish and bearish option strategies as well. So there's one called a bull hedge strategy. And instead of explaining it, why don't I just show you? Probably easier to show you. A bull hedge is essentially you buy an out of the money call spread. So that's a debit spread. And you simultaneously sell an out of the money put spread and receive premium for doing so. And typically you can do this for even money. So the amount of money you receive for selling this out of the money put spread, you can then finance the purchase of this out of the money call spread. And if the market rallies, like in this example here, then that strategy should do well for you. So the call spread you own would gain in value, and the put spread you sold to somebody else would lose value. So that's just one example. And here's the question you probably all have is, I think that's Jackie Chan, if I recall, but which market are we trading? You know, how do we even begin? How do you create the spread? Which strategy do I apply? You know, at what timing? What's the correct price? You know, how do I enter this position? And then more importantly, or just as important, how do I manage the risk and the reward? So the answer is ThetaTrader. So someone asked earlier on before we started, what software are we talking about? Well, that's your answer. It's called ThetaTrader. It's software that we designed and developed for our clients. These are pre-built option spreads. Our proprietary algo will create theta trades each day. And these are professional style strategies, multi-leg option strategies, full bull, bear, or flat market conditions. So it really doesn't matter. You can use options as a tool and apply them in any way you'd like. And then one of the big keys to ThetaTrader is the automation. So you can automate your risk and your profit taking management, something called the RTI, the risk thermal indicator. And that's our color coded approach to managing your positions. All right. So with that said, I think it is time for the demo of ThetaTrader. Let me switch screens here. And I think what I'll do also, let me go ahead and stop the video right now. That way we have more room on the screen and you don't need to see me while I'm going through the ThetaTrader here. All right, so this is the ThetaTrader dashboard. And this is a demo account. So yours would look pretty much the same, although you wouldn't have some of these other menu items here. And you'll notice you have the theta trades here at the top of the screen, and I'll explain that in just more detail. Here's any open, short, or sold positions. You see the various colors here on the risk thermal indicator, and I'll explain what that means. And then your open, bought, or long positions. Then over on the right side, you have your account info, and this is your data from your trading account. And this is, of course, all integrated with your AltaVest trading account, because ThetaTrader is our software product that we developed for our clients. And just to reiterate, AltaVest is a brokerage firm. So this is our tool for our brokerage clients. You can see market prices here. And let me jump into this a little more here. You'll notice there are bullish and bearish and neutral or non-directional strategies. And these are all pre-populated. Now the markets we're looking at are the E-mini, S&P 500, NASDAQ 100, and the Russell 2000. And I will explain a little bit more as to why we focus just on these markets, but really the short answer is that's where the volume and liquidity is, and that allows us the ability to trade these multi-leg option strategies compared to other markets where you don't have that opportunity, because the option markets are too thinly traded and the strikes and expirations are just not available. So these markets are really where all your volume and liquidity exist. And since we looked at the Condor and the Dragonfly, we'll go ahead and look at some examples here. For example, here are today's Iron Condor trades that the algorithm generated for us. Let's see if I can make that a little bit bigger on your screen. Hopefully that helps you out a little bit. So you'll notice there are trades available from 16 days till expiration all the way down to 60 days till expiration, all the different expirations here. And you notice the strike prices are pre-selected and pre-populated regarding the puts and the calls that are part of the strategy or the condor for each one of these expirations. This here is called your profit potential at expiration, and this is your targeted annualized return at expiration for each one of these trades. And keep in mind, this number here, the TAR as we call it, is to compare one trade to another. It's not to suggest that you can place this trade every 16 days and at the end of the year you'll have a 202% return on your account, because that would assume that this trade were available every 16 days and you made a maximum gain on every single trade. So really, this is to compare one trade to another. And you notice that the shorter days till expiration trades are going to generate these larger TAR figures, and that's just because it assumes you're going to be placing more trades throughout the year because they have a shorter duration on them. But just wanted to point that out. We'll go ahead and drill down. And let's look at this September week 2 expiration here, and this is on the E-mini S&P 500. First thing I like to do is look at a chart. So here's what this trade looks like. Here's the current price. Here's the call spread you're selling, and that's the 60-40 call that's being sold. And then you buy a 60-60 call as the blue line. And then with the puts here, you're selling the 52-50 puts, and simultaneously you're buying the 5200 put to cover that position. So the idea is you collect premium on the calls, collect premium on the put side of the trade, and you're expecting the market to stay within this range over this period of time. We'll look at some of these details here. 60 days till expiration, your expiration date, the settlement value on this trade, the premium collected, put risk, call risk, commission, capital, cash required, profit potential, targeted return on cash, and then your targeted annualized return. And if you don't know what all these mean, it doesn't matter because you can look it up in ThetaTrader, and I'll show you how to do that in just a minute. But I want to point out here, you're selling the 5220 put with a delta of 9.81. So the magical computer chose these particular strikes here at this particular value. And that means the put you're selling has an over 90% probability, what's it, a 90.19% probability that it will expire out of the money. And then the calls you're selling here, 6.82 delta, so over 93% probability that those calls that you're selling to someone else will expire out of the money. So you can see the algorithm has chosen these strikes for a reason, and these are the puts and calls that go along with it that you would buy as a hedge. It always defaults to a sell. You're selling the condor because you're collecting the premium. You're not buying it. If you're buying it, you'd be paying the premium, but you're selling it, collecting the premium. So you're collecting, in this case, $91.50. And then the cash required is $908.50. And just a little word on that, people might say, well, I'm putting up $900 and I can only make $90. That doesn't seem like a good risk reward ratio. Well, the key would be that the deltas here suggest that you have a very, very high probability that these puts and calls that you're selling will expire out of the money. So that's the distinction that's being made. And it always defaults to a quantity of 1. Maybe you wanted to do 3 of these, and you can see the premium potential, profit potential moves up, cash required goes up. Why don't we go ahead and do 4 of these? We'll leave the pricing alone, and we'll just go ahead and place the order, and it's just that easy. And in the demo account, it just assumes you're filled. So that's how easy it is to use the dashboard to select a trade and place a trade, because they're already pre-built for you. So they're automatically constructed. Let me jump back to the dashboard, and we'll look at a dragonfly. And we talked about the dragonfly being another non-directional kind of a variation on the condor. We'll go ahead and look at this one, September week 3 expiration. And you'll notice perhaps if you're looking at the targeted annualized return, these numbers are typically a little bit less compared to a condor, and that does make sense, and I'll explain why. If you look at a chart here on the dragonfly, again, we have that 4-3-1 structure, and the 4-3-1 structure on the puts and the calls, both are the same. But the reason why your profit potential is a little bit less compared to a typical condor is because you buy, in this case, the 60-75 call, and you pay money for that. That's like paying premium for additional insurance. And the same thing here, you buy money, you buy this 52.50 put here, and you're paying premium for that. So it's a little bit out of pocket cost, but the benefit is this strategy can be a bit more robust and risk averse in certain situations, so that you don't end up taking a loss when a condor might, or you actually end up getting out of the position for a gain much earlier than a condor. So that's the trade-off. And same type of graph here, table and details. You've got 67 days till expiration on this trade. Settlement value 8.4, the premium being collected, you put risk, the call risk, the commission, cash required, profit potential, expiration, targeted annualized return here. And you'll notice the cash required 46.64. Generally speaking, the Dragonfly has cash required of just under $5,000 per trade, and that covers your maximum risk on the position. And you'll notice the puts being sold have a delta of 9.37, and the calls being sold have a delta of 6.76. So again, the algorithm has chosen these puts and calls to sell because they have over, you're talking 90%, 93% probability that these puts and calls you're selling to someone else will expire out of the money. And then again, it defaults to a sell because you're selling the spread and collecting premium. Maybe we'll do 3 of these, and we'll leave the pricing alone, and we'll go ahead and place that order, and there you go. So just that simple in terms of how to place an order, because the algorithm has essentially built it for us. Now let's show you a really interesting feature under the simulator here. So you have sort of a time machine where you can back test and go backwards in time. I pulled up a few trades here, and we can look at these. Let me squeeze down the screen. We can see more. There, that's better. So here is a June 2024 expiration on the E-mini S&P 500. And this is from April 29, and this is a Dragonfly. And we can use these controls here to go forward in time, day by day. And you'll notice, you'll see the daily activity, the RTI is green, which means good or do nothing with the position. Your P&L is still negative, still losing a little money on the trade, and that's typical because not enough time has passed or theta decay hasn't worked. It's kind of fun to watch what's going to happen. You can see it turns yellow, a little bit elevated risk, but still do nothing. So the RTI is telling you what to do or not to do. Now the trade is turning profitable. And then it turns blue. And what does blue mean? That means take profits. And you can automate this so that when it turns blue, ThetaTrader is monitoring and scanning your account every day, and you get a blue RTI, then an order will automatically be placed to close out that position for you, because ThetaTrader says you've reached a big enough profit on that position. It's time to take your money and move along. So that is a trade that was placed. Let's remember here, April 29, and that's the E-mini S&P 500 Dragonfly. So here's the same date, April 29, and this would be a condor. So let's compare the Dragonfly outcome to the condor, and we'll use the same tools here. You can see the activity, same trade here, action at least, not the same trade, but same pricing here, of course. Turns yellow, goes back to green, so it's doing okay. Now it's starting to turn a little negative, the red P&L. Then it gets yellow, elevated risk. Elevated risk, we're kind of moving off the chart here, so let me squeeze this down. There we go. And then it turns red, and that means too much risk in the position. Close out the trade, and that's a losing position. take your money, take your margin, and go on to something else. So this can also be automated when it turns red. But I did want to point out the difference here. Sometimes the dragonfly is going to be much more robust. And in this case, you saw how you get a profit-taking signal on May 30th. And had you done a condor on May 30th, you can see the trade was slightly profitable, but it hadn't reached a profit target yet, according to the blue RTI. It actually kept you in the trade and then ended up being a losing position, unfortunately. So that's one of the differences between the condor and the dragonfly. You get more profit potential out of a condor, but you might end up taking a loss on a condor more often compared to the dragonfly. And that's the different trade structure. Again, you own this call and you own this put, and that costs you money for that additional insurance. Let's look at another one here. Here's a trade from February 8, and here's a condor. We'll go ahead and use the play button. And you do get a profit-taking signal, but you had to wait till there were only 4 days till expiration on this condor. So this trade worked out, but you had to hang in there for almost the entire length of the trade. I should also point out that if you're using the automation for the RTI to close out your position at a blue or a red, that means you're always going to get out of a position before expiration. So we don't ever suggest hanging on to these positions to expiration. All right, so remember this date on March 25. And this is the end of month March iron condor. Now, if we look at the end of month March dragonfly, let's compare that to the condor. So all is going well. You can see the green RTI. And look at that. It turned blue on March 15. So it had a profit-taking order with 14 days till expiration compared to the condor, where you were in that trade an additional 10 days, where you didn't get out until 4 days till expiration. So another benefit of the dragonfly compared to the condor is sometimes you can exit a position earlier for a profit compared to the condor. So I just wanted to make that distinction and point that out. You know, you can also just go right to the end of any trade. You don't have to use the buttons day by day. So just wanted to reference that. Now here's let me show you this here. We'll go back. There are bullish strategies, there are bearish strategies, and we talked about the bull hedge and the bear hedge briefly, and we can show you an example, but let's look at a simulator. And this is the strategy here where this is the NASDAQ E-mini for the June week 3 expiration. It's a bull hedge. So what you've done here is you buy this call spread and you pay money for that. But to pay for it, you sell an out of the money put spread. And let's just see how this works out. The colors are different when you're long or short premium, so don't worry too much about the different colors, but you can see here how obviously the NASDAQ rallied. So the call position here that you own did well. The put position that you sold to someone else did well for you. And, you know, that's kind of an example of a bull hedge strategy using the back testing here in the trade simulator. So let me show you how to do this automatically and automate everything for you. So you just go to your settings and you activate your risk manager here, and you activate the profit directive here, and then you save your settings here. Now, you're thinking, maybe I want to modify my risk and profit settings, and I don't want to use the default settings of ThetaTrader. Well, you can do that, and that's under the active risk manager here. You'll notice that the default level here for the red risk level, or the red RTI, set here at 0.50. That's default. You can leave it there, or you could get a little more conservative You can change it to orange. So when the RTI turns orange, then you'll close out that position automatically. You'll get a signal from ThetaTrader. Or if you want to be even more conservative, I guess, with your trading, you can do a custom risk level, and you can go down as far as 25. And those are levels referring to the delta on the short options. So yes, you can do this, but keep in mind, if you set it down to 25, that means you're going to take more losses more frequently. The losses will be smaller. Let me rephrase that. You'll take losses more frequently, but they'll be smaller. So anytime you adjust this risk level, if you put it at 0.38, that's sort of the middle of the road. Or if you put it back to the default at 0.5, that's fine too. But if you leave it at 0.5, you'll have fewer losses triggered, but the losses on each trade will be a little bit larger compared to an orange RTI or a custom level at the lowest of 0.25. But did want to point out how that works. People love using that customization. And then you can just simply save your settings right there. And then that's how it moves forward from that point. I will also point out that we've got this help file here within ThetaTrader. And you'll see all the RTI settings here explained, all the color coding. We're not going to spend time on that, but it is all explained there. And then there's also, oh, got my mouse kind of glitchy here. Also here, there's a lot of videos and tutorials within ThetaTrader. These are all short videos on using ThetaTrader and navigating how to place trades. There's education here on options trading education. So all this here is part of ThetaTrader as well if you need any help. And I also want to point out we have daily research available, something called TradeScope. That's proprietary research. So we do a little bit of technicals here, and then we're looking at what's forward, what's it like in terms of the outlook. And you'll see that's proprietary research for all of our ThetaTrader clients. And we also have something called the daily summary. And that's really an overview of what happened in Asia, in Europe, and in the US, and then an outlook for looking ahead and what to expect there as well. And then anything on the calendar for any economic reports and so forth. So we can keep you very well informed within ThetaTrader, everything you need here. And let me go back. And here is where you would go at a glance to look at your current positions on your dashboard, any short option spreads, any long option spreads. You can also go to look at everything on one page here. And if you're curious what this means here, I'll show you that in just a second. This is the trade alert section. Okay, so this is all your open positions here on one page. And if you wanted to see any more detail, you just click on any one of them and it pulls you down. You can see the day that you got in this case, May 22. See how the trade's been progressing. You can see it here on the graph and so forth. So these are your open positions on one page. And then here are closed positions. If you want to go back and look at the history of your trading, you'll see there are 20. You can filter for what shows up on this page. Oh, excuse me. By date or market or entry date, whatever you want to do. But this is basically everything here. So you got 20 positions, 16 winners, 4 losers total. 13 were short spreads collecting premium, and then 12 were winners and 1 was a loser. And then 7 were bought positions, debit spreads, 4 winners and 3 losers. And this is just a demo account, folks, so don't make any wouldn't make much of the results here, but you can see here's a position that got out for a loss, and this is all automated. So everything in here is done by the automation settings in the demo account that I just showed you. You know, if you wanted to look at this condor, for example, and you kind of need a refresher on what happened with this trade, well, you can go back, click on it. You'll see here you placed it on May 28, had 53 days till expiration. And then you can see as day by day went on here on the graph, the market went sideways and theta decay worked its magic. And you got a profit taking signal here on this date on June 28, and you closed out the position. So that's how you look at closed positions and open positions. And let me show you really probably the best feature of all. These are the trade alerts, and I'll show you two examples of how these work. One through the dashboard, which is this, and then also on your smart device or on your phone, and how it works. So these trade alerts will be sent to you, and they're going to be customized for you and your account. So you're only going to receive an alert if you have the appropriate funding in the account available, and also you don't have any other positions that are right on top of the current trade alert. So you'll see here, here's an alert. It's active. It just got sent today, pushed out, so you can view it here. So this is what you're going to receive on a trade alert. You'll get a brief description. So this is a September week 2 S&P 500 Dragonfly spread. Has 60 days till expiration. Here's the graph of the position. Here are the calls. Here are the puts. You notice the calls that you buy are 50 points closer to the money than the 4 that you're selling, and the same with the puts. And it's not always 50 points, by the way, but the algorithm decided that. Now here's the quantity. It's pre-selected for your account. Came in for this demo account at 6, but you can change it if you'd like. You can go down. You can't go more or increase the quantity, but you can go down and use that there. And you'll see here, you're trying to collect $2,121. You're trying to sell this spread at 8.75. Cash required 27,000 because you're doing a quantity of 6. If you go down, maybe you only want to do, one of them, and your premium collected here changes to 353 and cash required at 46.46. And we'll just go ahead. We'll go back to 6 and we'll just touch accept, and then that's all you have to do. So that's how easy it is to accept an order with a trade alert. Now, we do have a second here. I want to jump back over and switch screens again. All right. Let's look at the trade alert on your smart device or your phone. So these are what we call one-touch responsive alerts, because you literally just touch the screen and you'll either touch accept or reject the green or the red. And these work because, well, they work so well because they're live, meaning they're integrated with your AltaVest trading account. So if you want to accept an order, a trade alert, you just touch accept and the order is placed. So here's what it looks like. You'll receive a text message with a link. And you'll just touch that link. It will take you to the alert page, very similar to what we just saw. Although this little video here is a little bit outdated, but it's very, very similar to what we just saw. And you get a brief description, you get a graph of the alert. And the alerts can be for anything. It's not just condors or dragonflies. It can be call spreads, put spreads, bear hedges. It can be, any particular trade. It can be even buying strategies where you have a debit spread. Okay, so you see you're trying to collect $1,115, cash required. The quantity was pre-selected there of 10. You saw how you can change that quantity as well. And everything is pre-populated for you. 71 days till expiration. In this particular example, 63% targeted annualized return. Either accept it or reject it. And it's just that simple. So there you have it. It's just a demo. So that's how great those alerts are, because you don't have to log into another third-party platform or copy some alerts and try to figure out what to do. Everything is kind of teed up for you, and people absolutely love those alerts. So with that said, and feel free to make comments and questions and put things there in the chat. I'll get to them here in just a second. But with that said, this is how you can get involved, become a member, what we call a ThetaTrader member. You have access to all of the ThetaTrader software that you just saw. So you get the Theta Trades, the RTI, the Trade Simulator, that value of over $3,500 for the software alone, but that also includes the trade alerts that we just saw. Remember, these alerts are tailored for you and your account. They're integrated with your trading account. You simply touch accept, the order is placed, then the RTI will automatically manage trades on your behalf. Those alerts are valued at over $4,400. So the membership, again, includes everything we just saw, valued at over $8,000. And I think to put it all, make it all work together for you is you have people to talk to, private coaching. You've got these 1 hour screen sharing sessions. We're all licensed and experienced, and we can basically be your trading coach or your mentor, your co-pilot, whatever you want to refer to us as is fine by us. We're licensed, and we've been doing this for many years now. We can discuss trade strategy and review your trade history, value at least $7,500 a year for that type of personal coaching. That's all included with your ThetaTrader membership, the software, the alerts, the private coaching, valued at over $15,500. And I want to point out too that proprietary research is part of ThetaTrader. That research is valued at over $2,900 with TradeScope and our daily commentary. And I mentioned those online video tutorials. So everything is available at your fingertips within ThetaTrader. All of the video files there to help you along the way. But it is simple, it's intuitive, it's user-friendly, and you probably shouldn't need a whole lot of spend a whole lot of time learning your way and navigating through ThetaTrader, because it is very user-friendly, and that's on purpose. So all of this together valued at $18,500. But of course, that is not what the membership is going to cost today. This is how much we would charge doing live in-person events, traveling around the country really before the pandemic. People would line up at the back of the room and pay $4,000. So we're going to do much better than that. And what we're doing here for the first 25 that sign up, and this is really our lowest price ever. That is not a gimmick. That's not just baloney. It really is our lowest price ever. And this is for Timing Research discount price of only $497. So only $497. It's our lowest price ever. Here is the link, cf.altivest.com/TR. Here's an example of the order form, just one order form. You click membership and that's it. Here's my number. Here's my email if you have questions along the way. But here's the link. You might want to take a picture of that or do a screen capture. And here is really, I think what people really like about this too is the money back guarantee. So if you sign up and 29 days later you decide you don't like it, then we'll just refund that membership fee. So you have no risk on that membership fee. I think you're going to love using it. Once you sign up, you'll get your login credentials. You can start using things in demo mode and get your account started. and onboarded. And if you want a free account, a free membership, that's fine too. People love taking us up on this offer. $100,000 plus account, you'll get 100% rebate on your membership. And then 50,000 to 99,999, you'll get a 50% rebate on your membership. So that's exciting stuff, folks. And that's the best offer we've ever really presented. And you're going to love it, I think. And now for a few FAQs along the way. Tax efficiency. So keep in mind when you're trading in futures options, they are tax efficient compared to in securities. You can lower your overall tax rate by 10% just because you're in a tax efficient space. So I won't go to the example, but if you're trading futures versus individual stocks, you get the better treatment of your taxation, the 60-40 treatment. 60% of the gains are taxed at the long-term rate, which is usually less than your individual income tax rate. So you can have a tax savings in this example of over $2,000 just because you're trading in the tax efficient space. There's no more itemizing as well. You just get a 1099 with your P&L for the year. So always consult your tax attorney or advisor. And IRA, absolutely. Contact us for details. We have accounts, people with their IRAs opening every week with us. And why trade the E-minis? The E-mini S&P 500, for example. Well, they're liquid, they're efficient, they're cost effective, they have a large market share. So densely packed strike prices, 100 annual expirations ensure granularity and coverage. That helps with execution. According to the CME group, there's a cost savings of $4 to $15 per contract compared to SPX options. So again, that liquidity is what offers that efficiency in terms of execution and tight bid offer spreads. Again, liquidity, wide array of maturities. And part of the advantage too is here's the call side of a condor, for example, or a dragonfly, and the put side. And as time goes by, the algorithm is looking for more calls and puts to build more trades, and it's going to find what it needs. Here's another set of calls, another set of puts. And as time goes by, here's another set of puts and another set of calls. So these out of the money calls and puts are going to be available in these E-mini stock index markets. And here's a big advantage with ThetaTrader and trading a dragonfly. They're done as one order at one price, so you don't have to leg in. If you try to do this with stock options, you can't do it. You have to leg in at two separate orders, and then you have to leg out at two separate orders. Very inefficient, and it's really a mess. So big advantage with the markets we're trading and with ThetaTrader, you can do everything as one order at one price. So take something complicated like a six-legged spread, and you can do it as one order. So it allows you these sophisticated option strategies. You don't only want to just buy option. That's not how the pros do it. The rookies are the ones that are just simply only buying options. And if you do that, you have theta decay always working against you. So here's a video I saw a while back, this woman on CNBC, and she's absolutely correct. She makes some comments about this. The appeal for retail investors to buy options is that they're much cheaper, but your potential for profit is actually not that high. In 2021, 11% of Robinhood's active users made options trades, but of that 11%, fewer than 1% actually made multi-leg options trades. So yeah, you want to trade on the side of the professionals and not just simply rely on buying options and trying to hit those grand slams. More advantages as to what we do with these E-mini options. It's simpler to track one or two markets, not thousands. Efficient margin, and there's a clear cost structure. There's no hidden cost. Remember, these are all trading at the CME group on their Globex electronic exchange. And that means every order, if it's for one trade or 1,000 trades, every order gets treated equally. Your orders don't get sold. There's no payment for order flow. There's none of that free commission stuff, which doesn't exist because, as we know, if it says it's commission free, you just end up getting execution that's inferior. So none of that with AltaVest. Our commission rates are transparent. It's 5 1/4 round turn, all in. And here's an example right here of a big box brokerage firm. I copied it right off their website. They say they're at 225 for futures options, but that's per side. And then what they don't show you is they have to add more fees on top, and it ends up being higher, plus the exchange and regulatory fees. So our rates are competitive. People ask about performance of ThetaTrader. Well, of course, it's just a tool that clients use differently. So every client has different performance. Everyone is self-directed. But I should have pointed out in the demo that all calculations are net of trading cost. So everything in ThetaTrader you saw with percentages and dollar figures is net of all trading cost. What size of an account? Minimum of 10,000 is our suggestion. And then, why would you even consider something like ThetaTrader? Well, this type of approach with strategies that can sort of be built and crafted to go anywhere may improve diversification and lower portfolio risk. And you say risk of what exactly? Well, won't the Fed save us by lowering rates? This is kind of funny. Is the Fed Reserve just winging it? This is an article about how their dot plots are always wrong, but I'm not going to get into that. But this is interesting. Everyone's expecting rate cuts to be a big boom for the stock market. But if you look back in history, it's just the exact opposite. When there are rate cuts, the stock market drops because that's a signal that the economy is in recession. So anyway, keep that in mind, folks. I think the market might be moving higher, discounting the rate cuts ahead. But once they actually start happening, history tells us to look below, look out below, as they say. It's not good for stocks. I mean, here you have rates dropping here, the market down 41%, rates cut again, down 55%. Rates are cutting here again, down 24%. So what's next? Well, we shall see. Of course, there's always inflation to worry about, purchasing power of our dollar, or even stagflation. No economic growth with inflation high. Average hourly earnings are down when you adjust them for inflation, which is terrible. The LEI, leading economic indicator, is giving a recession warning again. So there's a close-up of that graph. But anyway, the point is, it's good to have strategies that you can maneuver with quickly and not just be stuck being passive. And let me see if I have a few comments coming in or any questions along the way. Someone asked about the one touch. I think I answered that. Any questions about the one touch trade alerts? Anyone? I don't see anything else. Okay, that's good. So really, we'll review here the benefits of the ThetaTrader approach with those stock index options and strategies. Again, bull bear non-directional strategies available. No day trading or stock picking. You don't always have to choose up or down directions to trade the chop. So we don't always have to jump into this and try to pick those directions. We can be non-directional too. The non-directional strategies do have a wide margin of error. Like here's an example: 750 points between the calls and the puts in this example. It can be a big time saver for you. Here's an example: someone's spending 10 to 12 hours a day trading. Not many of us want to do that or are able to do that. So alternative approaches, that's what the ThetaTrader approach allows you. So you can have non-correlated, or what they call absolute return possibilities. Warren Buffett mentions here the Buffett indicator. People refer to that. So how do you know if the stock market's overvalued or not? Well, according to the Buffett indicator, it's at its highest in history. So what you're trying to say is GDP in relation to the stock market performance is not good. Stocks are overvalued according to his ratio. Household stock allocation at an all-time high. And here's another thing I thought was interesting. The E-mini S&P 500 is not as diversified as you might think. The top 5 stocks make up 29% as of the end of June. And then 40% of the S&P 500 stocks are down year to date. So that's pretty crazy to think about that. The equal weight S&P 500 here, compared to the S&P 500, really distorted there. You can see here, equal weight index compared to the S&P 500. Advanced decline line on NASDAQ, so many more decliners. So anyway, the point I'm making is there's a lot of dysfunction going on in the stock market, and you don't have to just sit quietly by and just hope for the best. You can take action and use some of these strategies and position yourself in different ways and at different times. We think these professional style option spreads, offer a better way. And just to confirm what are professional strategies, she's chatting here again. These spreads are the buying and selling of contracts, a very common way for investors to hedge risk and volatility. It's usually cheaper because you can offset your cost by the proceeds from different contracts. And it's been used by Wall Street professionals for decades. So she's absolutely correct, and that's what we're trying to do here. So just to kind of wrap up and show you the 5 steps here, how to get started with us. You complete that order form, you get your ThetaTrader login, you'll get an email with your account opening. And then once your account is open, you'll fund it and you'll begin accepting and trading for real with those real trade alerts. So it's just that simple. And hopefully these algorithms can help you control some of your emotions in terms of when to get in and when to get out. And here's just kind of a brief summary. So the algo-driven options trades right to your phone, right to your dashboard. Bullish or bearish or non-directional strategies are all available here. You've got the trade simulator, sort of that time machine available to you. You saw how much fun that was to use and valuable as well. And then you have those one-touch trade alerts. So those are options trades. You like something, you touch accept. If you don't like it, you just touch reject. It comes on your dashboard and your email as well. You can see here, if you get it via email, you just touch that link. And then it comes on the dashboard. You saw how we did that today. So you click view and see the details, or it comes on your phone and you just touch the link there on your phone. Just that simple. And there you have it, folks. So I'll leave this screen up, and that's for the first 25 new members. And that's our lowest price ever, and that's no joke. So take advantage of that while you can. We've got the 30-day guarantee as well. And let me see if I have any other comments or questions coming in. Let's see here if my video is still working. Yep, we're still there. Okay. So any further comments or questions, anyone? I'll be glad to help you. You can put them in the chat box right now. You can call me directly at this number or email directly, Erik@altivest.com. That's ERIK. Let me try to think. Just to clarify, Altivest is a brokerage firm. So this is our technology that we built for our clients. So you would simply have an account with Altivest, and then you begin using ThetaTrader and have access to us as your personal coaches, and you'll start receiving your trade alerts as well. So I think you'd really enjoy using this solution. It's a solution that we developed over years and many decades of working with clients and getting their feedback as to what they want. Oh, good question. Someone's asking about transfer. Yeah, absolutely. People transfer accounts to us all the time. You would simply begin the onboarding process. First step would be become a member, and then we'll get you the credentials to start accessing ThetaTrader, and then we'll have you an electronic account application and transfer that you can start that process as well. And if you have positions, like if you have securities positions and whatnot, of course, we can't accept those because we're not trading securities. But if you have futures positions of any kind or futures options and whatever, cash is along with them, then of course those can be transferred. Oh, good. Yeah, thanks. Thanks for signing up. I see a sign up coming in. Hopefully I answered that question. Yeah, so just like any brokerage firm, it's no different when you open an account with us. There's an account application and you get your account number. You'll have access to your account in real time, just like any other brokerage firm. And also point out too, this is not, sometimes people think it's a managed account or a hedge fund. No, it's an individual account, self-directed, and you have full liquidity. So there's nothing like hedge fund where you don't have access to your money. So um, everything's liquid. If you wanted for some reason money out of your account, depending on the time of day, you can typically get it sent out and received that same day. So you have, and
Hey,
we're
Eric,
also,
are
oh yeah, go ahead.
are people able to trade this as an IRA or in an IRA?
Yes, yes, individual retirement accounts, absolutely. So we work with Midland Trust, and you would have an account with Midland, and then of course you would work with us and have access to your ThetaTrader account and so forth, trading with your IRA. So IRA accounts, is that redundant? IRA accounts? I think it is, but IRAs are something that are, I guess you could say, in high demand. And we have people transferring IRAs all the time. We're just opening a new one, so that's fine too. Let's see here if there's anything else. Someone asked
Someone said
about,
they joined late and just wanted to know about the minimum you recommend again.
yes, the minimum account size is $10,000. And that would still allow you access to be able to trade iron condors and various credit spreads on puts and calls, and of course even just engage with debit spreads. Each iron condor margin is about $1,000. So with a $10,000 account, you'd still have the ability to use ThetaTrader and use those strategies. Someone's asking about San Francisco. We are in Southern California, so we're a bit of ways from San Francisco, if that answers the question. But it doesn't really matter where you are. We have people, a lot of clients actually in Australia. I mean, you can't get any further away than that. So it doesn't really matter where you're located. Hopefully that answers that question. But yeah, feel free to sign up. And just to reiterate, there is a 30-day guarantee on that right here. So you really don't have any risk on your membership. But what we find is once people sign up and start using ThetaTrader in demo mode and start getting onboarded, they really, really like it. They like the convenience, and they like having access to something that is otherwise quite complicated. And we've made it very user-friendly and intuitive. Someone mentioned they're in New York. Yeah, absolutely. I mean, whether it's New York or a lot of people in Florida, people along the West Coast, people in overseas, people in different parts of the world, it doesn't really matter. So everything is done mostly if you're trading, like for example, if you're trading overseas or from overseas or from a different time zone, a lot of times people are just relying on their own dashboard and the alerts. And if they want to set up a time to chat with us, that's fine too. We can put that on the schedule. One distinction too between us and typical brokerage firm is we are real people and we have experience and licenses to do this. So, we're in a regulated environment. And oftentimes if you're signing up for other, maybe you're working with another, brokerage firm or something, but you're probably never going to really engage with anyone for real, at least on the phone, or at least in a pleasant way. Normally, if you engage with someone on the phone with another brokerage firm, you're having to tell them about, I need to change something on my account, kind of clerical stuff. So, but we're here to help you. We're licensed, we're regulated, and we've got this solution that we've put together over really decades of experience. So anything else? Any other comments or questions? Let me have it. Go feel free to shoot and put them in the chat box there. Yep, see someone here say they signed up as well. Any other questions that maybe I didn't get to? Oh, there's a good question. How often are trade alerts generated? The alerts, depending on market, are dependent on market conditions. So I would say in general, you might expect 2 alerts per week, maybe 3. It just depends on market conditions. So this is not something that you're day trading, and not something where you're going to have to be glued to your screen. Not a high velocity type of approach. But yeah, that's a very good section, or not question, a very good question, I should say. And yeah, if you just signed up, you'll get your receipt. Probably you'll have a receipt from the vendor that you signed up, and then we'll make sure that you get all of the details from us, and we'll have someone contact you right away with your login credentials and get you onboarded. So it's going to come from AltaVest as the sender, or it might come from Stripe. That is the merchant account vendor. Very good question. All right, so we've got the link in there, David.
Yeah, I posted it one more time, and it's on the screen for people. So yeah, just a reminder for everyone, as Erik mentioned, this is their lowest price ever to join. I was able to convince him to to give my Timing Research subscribers up to 25 new members this special discount price. So it's only going to be available for a few days here, and then we're going to shut down that offer. So yeah. So let's see, any other last minute questions here? Looks like let's see where several people have joined so far, so those 25 spots are going to go quickly. And yeah, great presentation. So there's one more chance. Any other questions from anyone?
Yeah, and I would also ask if anyone wants me to go back or just spend another second on something here, I can do that while we're all together. Any particular topic or subject, or I can go back into ThetaTrader if you want something else described. I'm available now, and if you're here, let me know, and I can do that for you, or we can do it, afterwards as well.
All right, well, I think that's it. So if you want to review any part of this after the presentation, it will be available on TimingResearch.com as soon as I can get it processed. Also, it will, if you search for Timing Research on YouTube, you'll be able to find the recording there as well. So thank you to Erik Gebhard of AltaVest for being here for this special Timing Research event. And again, check out the link on the screen right now, and sign up for ThetaTrader. All right, thanks everyone.
All right, thank you. Yeah, thank you. All right, bye-bye.